Okay, let's get right into the stock market technical analysis. We're going to go through the broad markets. We'll point out some individual trade ideas, and then I'm going to wrap up. Again, if you're interested in the private member group, I'm posting a bunch of additional trade ideas specifically to that private member group. I'm not going to cover those in the general channel, but if you want those, link in the description below. Feel free to join up, $5 a month. You can cancel at any time, so really no obligation there. All right, guys, triple Qs. We got the CPI reading came in slightly hot, and obviously inflation's not going anywhere. A lot of the bulls have said, "Oh, inflation's going down. Inflation's done with." And the reality is that inflation had been dropping. The rate of inflation was dropping. However, prices are still increasing. Prices are not dropping. They are actually increasing. They're just increasing slightly slower than they were at the very peak of inflation. But we're starting to see that those prices, the rate of prices increasing, starting to tick back up. So what does that do? Well, let's look at the Fed. Let's look at the interest rates. You can see the TNX spiking up today. At least this morning, you can see we're still kind of hanging in that range, but interest rates are kind of spiking up there. And then if I look at the 2-year, here it is right here. This is the 2-year yields spiking up quite a bit more, up to about 4.93% right now. The Fed Fund futures, very oftentimes they'll just follow the 2-year. The Fed Fund futures, I think, is at 5.30. And with the 2-year sitting at roughly almost 5%, not quite, but almost, that really is going, at this point in time, it really only leaves the door open for the Fed to cut by 125 basis point to align up with the Fed Fund, with the 2-year. So if they're at 5.3, they can cut by 25 basis points, dropping it down to 5. 2 years sitting at 5. That's really it. We're kind of pricing down to one cut. So this entire rally that we've seen, and let me go back to triple Qs, in the market, really that started back in, really started in October, but really just the beginning of January 2023 was all predicated on the fact that the Fed was going to cut 6 times. Now we're down to 1. The markets are still at the highs. I think there's a lot of catch up to do to the downside. So let's look at that. Triple Qs still trading within this range here. All right, we're still in the sideways range. Support has not been broken, so there is no sell signal yet. We need to see support get taken out. 434-ish is that support. So if we break that, we should start to roll down pretty quickly. But again, it has not been broken as of now, so just continuing to watch. NASDAQ futures, same thing. You've got, this sideways range right here. You can see we're just still holding that support. So again, we're just watching this range. We're range bound. It's a relatively tight range, but in general, we need to see the support get taken out to help confirm more downside is in the near term. Just going through some of these sectors, you can see IYR, which is your real estate sector, taking a bath today, down, gapping down and moving lower pretty impulsively. Likely going to go down to the 200-day, and they'll probably hold it there today. But that's real estate, and obviously that's very interest rate sensitive. So that is, what we're seeing. I'll go through those home builders, but obviously that one's getting hit. IWM is also pretty interest rate sensitive because, again, you have small companies there that aren't profitable. They need to be able to borrow money in order to kind of stay in business. So borrowing money is very interest rate sensitive. So obviously we're seeing the IWM take a hit today as well. IWM to me looks like it's on a sell signal. You've got kind of this upward trend, broke trend, kind of chopped around, but we're starting to gap down. So looks like it's on that sell signal. XHB, again, another way to look at the home builders, gapping down today. So far holding that gap down. I think this one's on a sell signal as well. The biggest one, of course, XLK, which is just another way to look at triple Qs. I don't think Amazon's in this one, but it has all the other Mag 7 stocks. XLK, you can see here, still holding that support right there. So again, this one needs to break in order for the market to break. All right, we need to see the leaders, the Mag 7, the heavily weighted ones, start to sell down. Once that happens, the market and all the other sectors should come falling down with it, sitting right there at support. It's about 204.50. Okay, home builders. The one I've been really looking at is this PHM. The chart just looked the cleanest to me. DHI looks okay as well. But here at PHM, again, negative divergence. I've talked about this for a while. These trades typically take a while to kind of set up. So there's your divergence, bearish rising wedge. There's a gap down. That's a sell signal. You can see over the last couple days, to kind of clean this up, last couple days, look, right ahead of the CPI, it was this little bull bear battle. Kind of sell down, rally up, sell down, rally up, sell down. But today with the gap down, boom, that's impulsive. That's ultimately a sell signal. And then we take the widest part of the wedge to get the measured target, which is about there, at the point of the breakdown. And to me, it looks like this is set up for a push down to the 200-day simple moving average. All right. So again, I think we do this. There's some support right here. You can see the support at it's about 99.50. So I think we run right down to 99.50, get a bounce, and then ultimately head down to that 200-day. Okay, so that's the trade idea there. Another way, DHI, another home builder, pretty much the exact same look. Negative divergence. All right, you've got this bearish rising wedge here, a little bull bear battle that happened over the last week, and a breakdown, gap down, sell signal. Okay, so that's it on those home builders. GM, again, this one's still holding this bearish engulfing candle, so we're treating that as the top. All right, you want to stop out above that, a daily close above that, not just pennies above it, but you want to clearly see that it's going to close above that. That would be your stop level. Otherwise, this is the top. We should start to push down. 200-day moving average right here and a gap to fill at about 35.50. So I think that's kind of your first profit target. There's also gap entry, so you could mark that out as 37.44. One of those first profit target, and there's another gap down below. But ultimately, this thing should start to sell down. Uber, again, you've got negative divergence on the daily chart. You have this rising channel. Broke the channel, hit the first level of support, which is also this gap. All right, and we're still sitting kind of right there. We're sitting right on support. A break of this level, and you should roll down to gap fill about 69.67. So basically about a 6% drop down to that next level of support. All right, so I favor that. Again, we need to see the selling kind of, we need to see some selling. But again, it's right on support. So if it breaks, boom, it should just drop right down there over, it'll happen quickly. But I like that one for a short setup. Visa, again, sitting at support. There it is right there, horizontal support. This one's on a sell signal because it obviously was in an uptrend line. It broke, negative divergence. Just need to break that support. You break that support, should flush right down to the 200-day, which is about 254.42. And it does look like there's a little bit of support right in there. So that's kind of where I think that one's heading. Let me kind of just scan through here. ANF. Again, I like this as a short. Again, kind of sitting at support. If I roll down, you can see here support, and they're kind of trying to hold that. It's not definitive yet that it's breaking that. We're below it now, but just barely. They're really trying to hold on to that as support. So I need to see some more selling to help me clarify what let it be known that that's going to be a sell signal. As of right now, it's kind of right there at support. We break that, should flush right to the 200. I don't see any real support along the way. It's kind of just thing went straight up, should come straight down. So just waiting for that. LLY, again, this one's still, it's holding in there. It's kind of hanging out sideways, but it's actually kind of working its way lower. Again, the top, we're treating this bearish engulfing right here, this big candle. Bearish engulfing is the top. It's about 792. We'll call it 793. A daily close above that, you'd want to likely stop out. Otherwise, that's the top, and we should continue to roll down. Gap to fill. There's some support right down here on this trend line, so I think we head down there. Still looks good though. SHW. Again, negative divergence. Bearish rising wedge. Sell signal came right there. All right, we got that sell signal a couple days ago, a week or 2 weeks ago on the April 2nd, and we're heading lower. You can see we're just working our way lower. So that one's working out as expected. Again, this one, I see some, there's support down here about 293.80, decent support, and the 200 days just below. So that's where I think that one's heading. Again, from the sell signal, which came on this April 2nd, we're looking at about a 12% drop, maybe down to the 200, a little bit more than that. That's that trade idea. So that's all work. ELF, again, this one, bearish engulfing right here. This was a great trade because if you look at it, you've got rolling out on the daily, look, support, okay? Break support here, back test that support from underneath, which is now resistance, and put in a bearish engulfing candle. So that was your top. If you played that perfectly and shorted it at resistance, you're profitable now at 23%. Now we did hit this level of support, which I had marked right at about 164. Undercut it a little, but I figured it was probably going to hold, and we're still kind of above that support. So I need to see that get taken out, really the lows, get taken out to initiate the next sell signal. And if we get that, we should flush right to the 200-day moving average, about 138.57. All right. But until then, we're still kind of hanging out above support. So we could see a rally up to resistance. It'd be objective to short there up into that resistance right up here, or on a break of support. But until one of those things happens, it's, I'm out of the trade. I took my profit, and I'm just kind of waiting for the next objective level. Gold stocks in general. Okay, I'm looking for the pullback. I think we've started it now. Interest rates spiking. Dollar, take a look at the dollar here. Here's the DXY. Boom, big move in the dollar, up 1%. Dollar's spiking. This is going to put pressure on gold. So I think these gold miners, to me, look like a short, at least in the short term, for like a little pullback. GDX, it's on breakout. So there's GDX, the miners. It broke out, but I think we pull back, all right, down to about 31-ish. We'll probably undercut it a little bit. But yeah, somewhere right down there would be maybe an objective area to go long. But as of right now, looks like these things are going to pull back. They're already starting to. And yeah, just kind of scanning across. They all kind of gap down. They're still hanging in there a little bit today, so I don't see, it's kind of the same as triple Qs. It hasn't broken support. Many of these stocks haven't broken support. They're still kind of hanging in there. So still, we're just waiting, and again, a lot of these trades are still haven't resolved themselves. They still haven't triggered. But interest rates are rising. The rate hikes are likely they're coming off the table, and the market needs to price that in. As the market starts to price that in and stocks start to fall, then you might see investors exit stocks, all right, rush into bonds. That would cause rates to start to drop and open the door back up for the Fed to come in and try to save the market and drop interest rates. That's how I see it working. The Fed's not going to cut rates as the market's rallying higher, and the interest rates, the bonds are, interest rates on the bonds are rallying, the dollar's spiking. The Fed's only going to cut if the market starts dropping, if people rush into bonds, drop the interest rates down on the bonds, and then that opens the door for them to cut rates. And that's how I see it playing out. So I'm gonna wrap up here. Again, guys, drop me a thumbs up. Feel free to join in the private member group. Hopefully you're finding value in there. And I will catch you guys on the next one. Bye.